Welcome everybody, Doug McKay, anti-wallstreetguy.com on the 21st of April 2011. Starting out as always with a chart of the S&P cash, closed today at 1337 and change, 1337 and change. Shortened week here, so volume going into the 3-day weekend was a little bit lighter, obviously, than yesterday. But again, we're still falling within this channel, which is ideal. Let's cut right to it. If we break below 1302, 1300 on the cash on a close, we would be out of the S&P. Until then, the overall trend is long. We're above the 50-day moving average as of yesterday's close. We're also above the 20 and the 30-day moving average. We want to hold support. We basically want to hold a couple ticks below the low that we put in on 414, which was last Thursday of 1302. So let's just call 1300 on a close as our line in the sand where we would exit the S&P 500. All right. If we get above 1339, 1340, we'll be breaking out of this channel, which is a very bullish sign. I don't like to pick targets, but if we look at this long term on a monthly chart, that would increase the odds that we go to 1400, 1423 on the S&P. Again, if it all blows apart, we'll be out of it around 1300, 1302. All right. Again, ideally here we want to see this trade sideways a little bit more between 1320 and 1340, and then bust out above 1339, 1340. Let's take a look at a couple individual stocks. Let's take a look at Apple. We put this up on the blog the other day. Let's take a look at this on a weekly basis where we have our notes. Again, we anticipated a bounce here at support at 320. The overall trend was still down. We broke above that trend the last 2 days. We still want to keep our stop around 318. We said if we got above 348, that was good confirmation. 357 is really good confirmation that we'd be going out to new highs. The overall trend right now is an Apple. If it continues to move up, we'll move our stop up accordingly. Another good looking weekly chart and daily chart is IBM. We did put this up on the blog earlier this week, a still chart. At one point, this looked very high, hard right edge. But again, we were breaking above resistance out of a basing pattern. Therefore, with high probability, the chart broke out as it did here when we put this on the blog back in December. And then recently, as of the last couple days, we put this out. Now, if we look at this on a daily basis, we can see that we had a nice breakout today, fairly decent volume on a day where volume was low overall going into a 3-day weekend. Where would I have my stop here? Basically in that 162, 160 area here. Not all bases that break out continue to break out. Eventually they will break down. This could possibly be the case. That's why we always want to have a stop anywhere from 5, 6, 7% back from our entry point. Okay, let's take a look at the NASDAQ. And we said we wanted to, basically on a long-term chart, it looked very bullish, inverted head and shoulders on a monthly chart with a close above 2,800. We were looking for that close above 2,800. You can see we put this post out basically 2 weeks ago. We got that. We might get a little back and fill here to basically 2780, 2770. But again, we're above this horizontal line, and we are also above this area of resistance here. So the NAS looks good, as do the Qs. The overall market looks very good right now, but we always want to have a plan for the what if when eventually the trend changes. Not everything is working. We do not have any financials directly in the account other than what we hold in the S&P 500. But if we look at a chart of GE, we can see that GE failed to hold basically the 50-day moving average. A close above the crosshairs over here would be ideal, 2076. We traded as high today probably as around 2080, but we closed lower. This is why we always make decisions for the most part with 1 hour prior to the close, because here what we saw was a head fake. Most other financials are still breaking down as well. One of those would be Bank of America. Let's take a look at Citigroup. Trying to stick its head above the 50-day moving average. We'd really want to see it break above 470 in order to get long Citigroup. The semis are doing pretty good. Our stop on the blog held there. You can see we had a stop in here on this particular day. We were very close to our stop. We thought we might be taking a loss in that trade. But yesterday the semis were up very close to 5%. More follow through today. So those look good. We'd be moving our stop up on this to about 34.39. 34.39 on the semis. Gold continues to hold up. Let's take a look at a chart of UNG or UNH. Now this had a big move today. UNH, you can see on higher volume. But when we look at this back on a weekly chart, again, we never know how high things are going to go or how low they're going to go. We have to assume that when they're coming out of basis, like a UNH, like a GLD, like a SPY, that they're going to go higher, like an IBM. But we have to be always prepared for the what if. But you can see here that it was okay to continue to add here. So we'll be moving up our stop on the UNH as well. All right. But again, highly probable trades coming out of basis with an increase in volume. That's exactly what we want to see. There's still a lot of money on the sidelines, especially on the institutional side. Maybe some of the other individual investors won't come back into this market for a long, long time. But with all the institutional money on the sideline, certainly there's a case that the market can go higher. At the same time, we've doubled off the 2009 lows. So we always want to have our stops in place, both mental and hard. That's it, you guys. The overall trend is long. We'll see you on the radio show or on the blog. Happy Easter. We'll see you next week. Thanks.